Mortgage rates dropped more than 0.5% this week. The Fed had a meeting, as well as 4 jobs reports came out, and you can tell by the sharp drop in the 10-year Treasury as well as rates, the markets are betting that rate hikes are a thing of the past. There are still less homes on the market than there were last year, though housing inventory is still increasing this week, which is later into the year than last year. There is still no housing crash in sight, and many home builders are still offering mortgage rates lower than 6%, keeping housing very affordable for any buyers willing to move to the suburbs. But we've got a lot to cover today, so let's get started. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking at trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, and what's inventory looking like. And if you stick around until the end, I do a top 10 ranked chart of the hottest and coolest both cities and zip codes in all of Dallas and Collin counties, so you can know exactly where you'll get top dollar as a seller or where you can get the best deal as a buyer. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to move to the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is November 6th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here. It'll take you to the latest market update. First up is market news. The biggest news by far is that mortgage rates took a massive drop last week. Let's take a look at why this happened. We had 4 labor reports last week, and 3 of them were softer than expected. We talk about this every week, but inflation is already gone. Nearly all of the inflation that still exists currently is almost all from the housing market alone. So what the Fed is really looking at right now is the labor market. They think too many people have too many jobs, making too much money, and in turn, spending too much money, which makes the economy too hot. So they're looking for the labor market to soften before they're going to lighten up on rates. So job openings data was fine, but the ADP jobs report came in a miss. Jobless claims came in worse than anticipated, and then the jobs report on Friday showed a slowdown in both job and wage growth. So we had the Fed meeting on Wednesday, where it didn't hike rates, but instead they said financial conditions and credit conditions will now lead to lower economic activity in the future. In other words, high rates are working as intended right where they're at. So that Fed meeting led to a small drop on Wednesday, but by Thursday morning we had a huge gap down. Then Friday's report sent us through the floor. But let's go further, because I know there are still a lot of buyers on the sidelines because they keep hearing on the news that this recession is coming and the housing market is going to crash. Let's talk about it. Inflation is defined as a temporary decline in economic activity and is marked by a decline in GDP for 2 consecutive quarters. Yet last quarter, GDP just rose 4.9%. In order to have a recession, we need 2 negative quarters. Instead, we just got a big positive one. This is the reverse of a recession. The Fed is hiking rates, yet the economy is still heating up. And one of the biggest arguments was that wage growth was going to spiral out of control. The argument then was that wage growth can't slow down unless people are losing their jobs. Well, wage growth has actually been slowing down since January of 2022. In last week's report, wage growth is only up 4.1% compared to 6% wage growth in January of 2022. So all of the labor data released this week looks perfectly normal. And one important point is that the quits percentage is back to pre-COVID-19 levels. This is very important because the Fed doesn't want people quitting their job in order to take a higher paying job, which is what was happening. The labor market got so hot, people everywhere were quitting their jobs and going to employers offering more money. So it's great news that that's not happening anymore. My point is, I have yet to see a compelling case for a recession. And every month that passes, that argument gets weaker and weaker. It was real easy a year ago to pretend you could predict the future and say a year from now the market is going to crash, but now we're a year in and there's still no crash. So what now? In fact, there may not be any more rate hikes coming. My question is just, at what point and what data do you need to see to be convinced that there is not a scary, crazy recession coming and that what we actually have is just a soft landing? None of the doom and gloom talking points have come true, not a single one. And I named them all last week. You had the Airbnb bust, which is going to bring a ton of inventory from all these Airbnbs that were going to be forced sellers. You had shadow inventory. You had secret foreclosures that were going to come out once the mortgage forbearance was up. And none of this stuff happened. Now, on the other side of this, at some point, the labor market is going to soften enough, there's going to be enough unemployment and jobless claims that the Fed's going to drop rates. And when that happens, the housing market is done for again. There's still not enough supply. It's going to be multiple offers, it's going to be prices going straight up, and inventory going straight down. In other words, the clock has started. You have between now and whenever the Fed decides to drop rates to buy a house at a decent price. Okay, moving on, let's start with national housing inventory. We saw another increase in active listings this week over the previous week, with an increase of 4,000 4,326 homes in the country. That's nearly half of the previous week's increase of 8,206 homes. Now last year, the seasonal inventory peak was October 28th. So as of this week, with inventory increasing again, the seasonal inventory peak will officially be later than last year. However, we are still 8,091 homes short of where we were last year, but the gap is closing. Now let's look at new listings. After trending below last year's levels for most of the year, we finally caught up over the last really 2 weeks. And this is really great news because it was totally possible with rates going up this high that new listings would have slowed down big time. Because remember, most people listing their home are looking to buy another home. Very few sellers want to become renters. So someone who is listing their home today is committing to buying a home at a 7.5% rate. So that very well could have slowed things down, but it looks like buyers are just getting used to these new rates. And we are right back on track with the new listings data. Now this is nowhere near where we want to be, but it's way better than being under. See how low we were for most of the year? So we could have ended up with new listings every week way down here. But instead, it looks like we're going to be back on track. And if we can land anywhere between this 2021 and 22 numbers, then we're doing just fine. And it gives us a good opportunity to start building more inventory into next year. But all you need to know by looking at this chart is that from here until the end of the year, you'll have less and less new homes to choose from every single week until the spring market begins, which means there will be fewer and fewer great homes that come onto the market, which means you need to be ready to go when they come onto the market. You need to be pre-approved already, working with an agent, and ready to move before that house hits the market. Otherwise, you're likely going to miss it. Okay, very quickly, let's cover the number of homes having price decreases. This, of course, is national data. We'll zoom into local cities here in a minute. But in the entire country, we have about 39% of homes on the market having decreases every week. This, of course, is down from 43% last year. So we're still 4% less homes having price decreases every week than where we were last year. Okay, now we're moving on to mortgage rates. You'll see we started last week, that was the 30th, at a 7.92, and it just got better and better every day. Look at these 3 days. We had a 0.19%, 0.18, and a 0.13% drop. Those are all massive drops on 3 consecutive days. Of course, coinciding with the Fed meeting and then the jobs reports as they came out. Now let's look at the 10-year Treasury chart just to see what's going on today, because we don't get the official rate for today until later in the afternoon. So I like to look at this. So this black candle here where it closed, that's where we ended. That's where we got those 7.36 rates. You can see this morning is trying to start higher. This is not a very big push up, and it looks like it may actually be starting to come down, but all you need to know is down here was a 7.36. So if we close the day somewhere higher, then rates went up a little bit. But I would expect that after a massive move down like this, it should come back up some, even if it's going to continue down. So the interesting thing to see this week is, since rates dropped at the end of last week, I'm interested to see this week if that translates to an increase in mortgage applications. Of course, that will only help if this number stays down. If this climbs back up here this week, then we may not see any real increase in demand. But for me, this is a very good sign that this is not pushing up higher on Monday. And hopefully we'll get some sideways and some more down. As you can see, we're about halfway back. If we get down to here, that's going to correlate to about a 7% rate. So it's really not that far out of range. This makes for 27 consecutive weeks with rates around or above 7%. And I say this number because it's important to understand how are buyers adjusting to these higher rates. Well, for more than half the year now, we've been at least around or above 7%. So now to be around 7.4% may seem crazy high, but you have to understand most of the buyers in the market right now have never been quoted below a 7%. Now regarding mortgage purchase applications, we saw another 1% decrease this week. Part of that could be expected seasonally. Of course, the other part is these high rates, though as I was saying, I'll be very interested to see how the low rates, as long as they keep up this week, will impact the number of people applying for mortgages. This makes for a total of 18 positive, 23 negative, and 1 completely neutral print so far this year. And if you think just because rates are up near 7.5% you can no longer afford a house, I promise you still can. There are still ways that anyone can get their rate and their monthly payment down to an affordable range, and I made a detailed video on that. You can watch it here. So before you lose hope, make sure and watch this video. Now let's run through the MLS data. Starting with Dallas County, in the last 7 days, we had 323 closed sales. That's 66 more than last week. 237 homes went under contract. That's 8 less than last week. 449 homes listed. That's 42 more than last week. Of the homes that closed, 86 of them were immediate sales, meaning they went under contract within the first week. That's 25 more than the previous week. In total, 1,868 homes are either under contract or in pending status. That's down 153 from last week. Moving on to Collin County, 230 homes closed. That's 23 more than last week. 149 went under contract. That's 40 more than last week. So more closings, more contracts. 301 new listings, 7 more than last week. Of the homes that closed, 55 were immediate sales. That's 4 more than last week. In total, there are 1,407 homes either under contract or in pending status, and that's 81 less than last week. Okay, let's move on to housing data. Starting with Dallas County, if you've seen my videos, you know what I use as the market action index. It just takes all of this data, puts it into one easy to read graphic with a number. Anything below a 30 is a buyer's market. Anything above, we're asking how much of a seller's market are we in. And currently in the market, we have a slight seller's advantage. And this has just been dropping again, partially seasonal and partially because rates have been going straight up this year. But however you look at it, we are still in a seller's market. So as we can see, median list price looks to have bottomed out actually, which is interesting because usually January would be the bottom, but for the last couple weeks is exactly, it was 420 last week, it's 420 again this week. Median days on market has remained at 42 for a while now. The number of homes having price decreases had a small tick up. We'll zoom in on that in a minute. And something interesting also is housing inventory seems to have topped out. Again, remember seasonally, last week would have been the peak for the country, but it wasn't, and a lot of that has to do with rates climbing. So looking at Dallas County, it looks like we are getting close to that peak as well, where we're at 3,362, up from last week's 3,340. So only 22 more homes on the market this week than last week. That's definitely slowing down and suggesting we should hit the peak soon, which of course would suggest if you don't like the houses that are on the market now, it's not going to get any better. There will be less new homes listed every week, and inventory overall should start dropping soon. So please don't wait thinking better homes are going to come on. You've got to work with where you're at. Okay, looking at the number of homes having a price decrease, we had a tick up this week, and it looks like we're finally over 46.43, whereas last year we were at 46.11, so we are barely over the number of homes. I mean, I wouldn't read into that at all. I would just say it's in that range. Same back here, kind of in the 46, 45, 46 range. That was in 2019, the last kind of normal market we have as a reference. And then of course last year, it's the same 45, 46. And this year, we're at 46.43 so far. So nothing to read into there yet. Same thing, looking at Collin County. Collin County as well is a slight seller's advantage. Remember, Dallas was a 42, Collin is a 43. Median list price as well kind of looks to be bottoming out. Yeah, the last 2 weeks are the same, 590. Median days on market remains at 42. Number of homes having price decreases actually has been declining. We'll zoom in on that. Though for the first time all year, just starting a few weeks ago, inventory back in October finally started to climb after being flat the entire year. So I don't know if this is too little too late. It should also be noted, Collin County is a little different in that they have a ton of new construction. So inventory is not going to fluctuate the same as a city where all of the inventory is already built and it's just buyers and sellers transacting. Where there's a ton of new construction like this, it's really more dependent on how much supply are the builders releasing versus how many people are buying and selling resale. But looking at the number of homes having price decreases, we are way down from last year. Last year was really tough over here at a 55.06, and now we're all the way down to a 47.29. Speaking of Collin County and all of their great new construction, I made a video about a week ago outlining all of the builders who are having the biggest discounts, and several of them are in Collin County, so you can get a great deal there right now if you know where to look. So if that's something you're into, make sure and watch this video. You don't want to miss it. And now we're moving on to my absolute favorite part of the video, the top 10 ranked both hottest and coolest cities and zip codes in all of Dallas and Collin counties. And these rankings are just using that same market action index number that we just outlined. So starting with the absolute hottest cities, the number 1 remains Carrollton, number 2 Coppell. Those two keep their spots this week. Irving heats up 1, Louisville cools off 1, Garland heats up 1, Richardson cools off 1, Mesquite jumps onto the list out of nowhere, Grand Prairie heats up 1, Prosper cools off 1, and Grapevine as well jumps onto the list at the number 10 spot. So Mesquite jumps on at number 7, Plano goes from number 10 to dropping off the list and is replaced this week in the number 10 spot by Grapevine, Texas. Now let's zoom in on the hottest zip codes. The absolute hottest is, and remember, a 30 or below is a buyer's market, so 65.83 is an incredibly hot zip code. And the hottest this week is Irving, 75063, followed by Carrollton, 75010, Garland, 75043, Carrollton, 75006, Dallas, 75249, Carrollton, 75007, Louisville 75077, Irving 75060, Louisville 75067, and Richardson 75080. So the coolest zip code is a 55.30 here in Richardson on the top 10 list. So still way hotter than a 30, which is a buyer's market. Now moving on, we're doing the same thing, but the coolest cities and zip codes and the absolute coolest and the only buyer's market in all of Dallas and Collin County remains Leonard, Texas at a 29.64. Then Van Alstyne cools off 3, Whitewright heats up 1, Ferris heats up 1, Salina heats up 1, Sunnyvale remains, Farmersville cools off 1, Seagoville heats up 1, and Rockwall and Royce City remain in the top 2 hottest cities on the coolest cities list. Looking at the zip codes, the absolute coolest is Leonard, 75452, Van Alstyne, 75495, Whitewright, 75491, Ferris 75125, Dallas 75212, Salina 75009, Grand Prairie 75054, Sunnyvale 75182, Plano 75094, and Dallas 75219. So if you're looking for a deal, these are the zip codes to be looking in. All right, that's it for this week's video. As always, if you're looking to buy or sell in the Dallas area, just call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.